Hello and welcome to Finextra. I'm Emily Horler and I'm here with Alex Kwiatkowski and Johanna Pugh of Misys. And today we're talking about the future vision of what Misys calls the lending nirvana. Thank you very much both for joining me.
Hi Emily.
Absolutely.
Alex, what factors are standing in the way of innovation in commercial lending and why does it matter?
I think we've got probably three main factors, and they already come back round to the same thing, which is vintage or legacy. So whether it's legacy technology, which is stopping banks from really being able to capture the large slice of the commercial lending market which clearly exists, supporting that legacy technology are also legacy processes that perhaps haven't been revisited enough in recent years. And there's also, I guess, a legacy element around the people aspect as well. So we need to start responding much better to the needs of customers. So banks looking at their customers thinking, how can we best serve them in a commercial sense? And I think there's some optimism. To some extent, I think we're seeing the opening up of commercial lending. So if we look at the statistics that are released from the central banks, we can see a rise in commercial lending in kind of the post-crises era, but there's still much to be done and therefore much opportunity still remains to be seized.
So Johanna, how are the forces of regulation, competition and customer demand impacting this picture?
You know, when you think about the entire vision for commercial and complex lending, and you think about regulatory compliance and regulatory concerns, it's always going to be there. But how do we get past that? How do we move towards a nirvanic state for lending? And the challenges that these banks face today, from everything from credit to IFRS 9 to Basel regulations, very, very cumbersome. You have to have solutions that scale. You have to have partners that can scale and know how to handle these regulatory requirements, not just now, but what's needed for the future. And that's a big challenge for organizations.
Especially, I think, as it's a changing lending market. And we've got these new players that are coming in, so whether it's the peer-to-peer lenders who maybe have started out on their own but are now being attractive as targets to commercial banks wanting to acquire peer-to-peer capabilities, and we've seen that in 2015, we've seen it in early 2016
Absolutely.
As well. So there are the asset finance organisations as well. So I guess if I was to crystallise it, it's adaptability and it's agility to regulations. And people can complain as much as they like, saying, oh, you know, regulation's suffocating, it's choking the growth opportunity. But it's like, right, you have to accept that these are the parameters that we must operate within safely. We don't want any more risk being created in our industry. At the same time as I think regulators also have an empowering role to play. Yes, they are the supervisors, but they could do a lot more around identifying the uses of technology. So we shouldn't be just talking about fintech and all the things that that can do. One of the big things, and I think lending plays nicely to this, is the rise of regtech as well. So how can regulators help ease the wheels of the lending process rather than jamming things in them to make them run with some friction?
So what do you think lending nirvana looks like and how can banks get there?
Lending nirvana. Lending nirvana looks like for organizations, it's an ever-changing dynamic, but what I will tell you is what it looks like today is having the ability to provide self-service directly to your customers, to your large corporates, to your SMEs, not only from an app like you or I would work on as a consumer, but giving you the ability to see your exposures and handle transactions in global locations across multiple time zones, to being able to handle originations for banking organizations consistently, but yet uniquely across each one of the complex products. So from an asset-based loan to a commercial real estate transaction, having unique workflows and transactions, but still instantiating that you have risk under control. Being able to look at your aggregate exposure across not only your lending book, but also your trade, your treasury book, and having the ability to see from a country to country or from a region to region, have a look at the limit exposures in that process. In addition to that, having the ability to pull all that together and undermine that information with IFRS 9 calculations so that you know exactly what your capital reserves need to look like not only today but for the future. So when these new regulatory changes come into effect, you're going to see a dynamic shift in the way we promote and market our products, not only internally at the bank but also for our customers. And that's when it's really gonna instantiate, because managing and servicing those risks, providing that data back to the customer, having all that data accessible as an organization to be able to report on that, that is nirvana today. What is nirvana tomorrow? Oh wow. I mean, it's going to include everything from crowdfunding to peer-to-peer lending, all processed into that. It's going to include all sorts of data analytics and perceptive analytics moving forward. You're going to see all sorts of shift changes in the different types of products that are offered, and where they're offered and how they're offered.
I think lending also has some of the more, I won't use the word exotic, I'll choose a better word, some of the more innovative aspects of financial technology. So I think we can have a blockchain discussion, which we'll also see as to where it fits into sort of the lending side of the financial system. And also just picking up what Johanna was saying is that if I was to think of it, nirvana really is in, I think, 2 or 3 states. And there's an internal nirvana, which is we can run the bank far more efficiently, and that gives cost reduction, that gives the opportunity to either reinvest those savings into new areas or return it in the form of dividends to shareholders. So I think that aspect is really important. But nirvana, and I think it lends itself to, no pun intended, to everything that we've done and we're doing, which is not just what does our customer in the bank want, what does our customer's customer want? And that really is nirvana. So it's not just thinking about what banks need, it's thinking about their customers as well, using the insight, whether it's looking back historically at things that have been done or using predictions to say likely this is what's going to happen in the future and how banks need to respond accordingly. But I think the best thing about nirvana is that it isn't, in this case, mythical, is that the technology that you need to have to create a nirvanic state exists. We're not waiting for this miracle to come out from somewhere to say, aha, it's here now. It's just about how you start to capture and change some of those, again, vintage technologies and processes and start to move forward. And I think the banks that get that can move forward at a pace which means they leave their competitors potentially trailing behind and create a gap that's going to be hard to bridge. So from a competitive advantage standpoint, which I think really is nirvana, it's marrying together technology plus the people plus the processes and the vision for the future. Customers get a better experience, regulators are happy, and ultimately investors can be satisfied that they've put their money into a good institution as well.
That was a perfect summary. That was perfect.
Alex, Johanna, thank you very much.
Thank you, Emily.
Thanks, Emily.
And thank you for watching.